Alright guys, so in this video I'm going to show you the simple and easy steps I use to get my daily bias. A lot of you have been asking me for that because you're having trouble with it, so let's make it as simple as we can so you guys can start getting more successful trades. Alright, so what I do, I look on a daily time frame and I look for liquidity, structure, and where in the range are we at that current time. So if I was to do that now, we have here a daily break in structure. Okay, so this shows us that price is wanting to move bullish now. We have the range from here to here, and price has gone into the discount of the range. So now if we've gone into the discount of the range, we can start to expect buys to happen. So that's building the story now. Oops. So after that, where am I looking at liquidity wise? So here was buy side liquidity as well. We took that out, then price dropped. What did it do? It took out sell side liquidity on a 4-hour time frame, which would be these lows. So now that we've taken out sell side, I can see this bullish push upwards. I want to take out buy side liquidity. So here will be where buy side liquidity is. And then we have also here some buy side liquidity, and also another good sign that we're going to go higher is this wick here is a build up of liquidity here, and we're so close to it, so that's showing me that we'll push right through. So this is, I'm going to show you for the week that just passed how you could get the daily bias. So if you guys haven't subscribed, please do. It'll only take a second and just helps me out, shows me you appreciate these videos, you like what I do. So now on the 4-hour, what do we have? We have a stop hunt and we have a sweep of sell side liquidity. So now once I have that, we have also a 4-hour bullish break in structure. So that's already building the daily bias right there coming into Monday. So if we fast forward this a tiny bit, all right, we've had the daily come back into the 50%. We've had a 4-hour bullish break in structure. We can see this is drawing, this will be a liquidity pool drawing price into it. Then we've got buy side liquidity here and up here that we want to target, plus a strong low. So this shouldn't get broken past. Alright, now going into on the 4-hour, there's not much here. It's just a strong push, no real point of interest. So go to a 1-hour time frame. So I trade the London session, so that's coming right there. We can see there was no break on the 1-hour to say we're going any lower right now. Now I'll go to the 15-minute. So on the 15-minute time frame, what I see is that over here it wasn't a break. See, I used the bodies of the candle, and if we zoom in, it's just the wick here that's broken. So because that happened, I'm expecting now price to go up after that, and then it's up to you to use your entry techniques and whatnot. But here we had a sweep of liquidity, and then on the lower time frames you could enter there and then go up. So let's just see on the lower time frame. Here we had the sweep here. We get the break of structure here, at least for me, when that candle goes right through it, body of the candle. And then here you have your fair value gap, and you could enter there. And then what are you targeting? The higher prices that we were just looking at before. So we said, where was it? This was the nearest target. If we're looking at it, just here, that was the first bit that we were targeting. So there's your daily bias just for Monday already, how you could have caught this trade. And we know that we're wanting to move bullishly towards the buy side liquidity here. This is just going to cause a minor retracement. So because it is a liquidity pool, but it's not a major liquidity pool on a high time frame. So we took this out, it drew back a bit, and then it goes higher again. So again, what you could do, if we're on a 5-minute time frame, gives us a bit more information than the 15 there. We can see we've taken out these lows here. We got a strong push up afterwards. Here, broke structure. And then you could use entry techniques off the order block or whatever it is in here that you'd use. We also have even here the 15-minute break-in structure, and then you also have this fair value gap that you could use with the order block. And then you're just targeting higher prices. So that would be your Monday. So now going into Tuesday, we'll do the same thing again. So the daily time frame, nothing's really changed here. We're still expecting buy side liquidity here to get taken. However, this time we've had this taken out here, so we don't need that anymore. Going just before there. So now we can see here, again, daily buy side liquidity is the draw, so we expect higher prices. On the 4-hour, we have this order block here, but we're not expecting that to get taken just yet because, or we'll be fluid with price and just see. So we've got the 1-hour low, the 1-hour high. There's no break yet on that. So we'll continue going higher for the buy side liquidity. All right. So price is just dropping a little bit, dropping. We can see this is the last bit of liquidity, internal range liquidity from here to here on the 1-hour, and now the 15-minute internal range liquidity. So once this gets taken here, again, the same thing. There's no reason for it to come any lower because we're seeking the buy side liquidity on the daily time frame. So now on another time frame, so you could go to your 5-minute or 1-minute, you'll look for your entry in here. So you got your 5-minute, your 1-minute time frame, and however you want to take your entry or however you see fit, you'll take it and then you could run with your profits. Again, if you're looking at the higher time frame, got a break-in structure here after you swept this liquidity. You have a nice little fair value gap here that you could maybe enter off or look for a lower, and it's perfectly built up liquidity right before it. That helps to show you that this point of interest is actually a high probability zone. So yeah, you could just look for your lower time frame entry here or whatever it may be, if you just wanted to enter off like that. And again, you're targeting higher prices up here, and then also you can target all the way to buy side liquidity. So you could have held the trade from Monday up to here as well. So here we go, and then we get a big push up on Tuesday. We take out the buy side liquidity. So now we have to just wait and see what structure is showing us. So going into, so that was our Tuesday. So now we'll fast forward to Wednesday. So going back to the daily time frame, I might just pull this here so it doesn't show us too much. On the daily time frame, what do we see? We see that the buy side liquidity here was taken. So now we can expect price to go lower to take out sell side liquidity. We also have a very small fair value gap here, which will draw price into it. So now you're using the daily time frame to show you again where it will go. So what do we have? Buy side liquidity taken, daily fair value gap. We can look on a lower time frame to see, did structure change to show us that we're going lower? It's once it takes out the buy side liquidity on the daily, it's showing us that we may go lower, but we need a lower time frame to show us that it really is. So here we get our break-in structure, and then we can see here that we tapped into the bearish order block. So that's a good sign that we're going to go lower already there. So now where is on the 4-hour time frame? Oops, sorry. on the 4-hour time frame, if we just took out daily buy side liquidity, we will want to take out sell side liquidity. And here is the sell side liquidity right here on the 4-hour time frame, because if it's a daily time frame, the next lowest would be the 4-hour. So now we're expecting price to go down to this area where the fair value gap on the daily is, fair value gap here as well on the 4-hour, and an order block. And now we've got a 15-minute break tapped into an order block, and now it's broken again here. So this is a good sign showing us that we're going to be bearish. And then price goes up, and in here you can look for your entry. So for this day we had a bearish bias because we already took out the daily buy side liquidity. You could enter from here, put your stop loss there, and now you're targeting the lower prices. So if we look on the higher time frame, what I would first do here, I would target this. This is your safe targets, and then you could target further down like that. On this day, you'd be at break even, definitely here. On this day, I think it was an election, and what happened, price dropped, and then it came, wicked this out, and then it went for the sell side liquidity. So sometimes there's just nothing you can do. In this situation, you wouldn't have been, you'd be at break even, and you would have been, well into profits at this stage, even if you held it till here, 16R, or here, 6.5R. It's a lot. So going into Thursday now. So again, on Thursday, what do we have? This is still here on the daily time frame, the daily fair value gap, and the sell side liquidity hasn't been taken out yet. So we're still looking for lower prices into here. So now on this day, there was a big push lower. You would have to look for your trades because there's such a big gap in this area. So what you could have done, or what I did, I took a trade off here, off the order block. We had the stop hunt. We broke structure here, and then you could take your trade off this order block. And again, you could target those lower prices. So my stop loss was a bit tighter just because of I did it tighter, but anyway, you can enter like that and target the sell side liquidity here. And there you go. Again, another day where your bias is all based off the higher time frame, but you're entering on a lower time frame. Now that, well, we can see the reaction already, but now that we took out the sell side liquidity and we've tapped into this fair value gap and this order block here, now price can keep going because we took out sell side liquidity on the daily, and we know that this is our target for buy side liquidity. So then as soon as we achieve this objective of taking this out, we go to enter there. So what we could have seen was price was dropping. We can wait for it to get taken, tap into this area here. There was also a 1-hour order block right there and a strong low here. So without going into it, but you could look for your lower time frame entries there, or you could just put your entry like this, a limit entry, and again, safe target would be here, and then you can also target the buy side liquidity right here. And price taps into it and it just shoots up like crazy. So that's that one for the Thursday. And now Friday. So we've taken out buy side liquidity here. This is very important now. Buy side liquidity, sorry, let me push that back. We took out the buy side liquidity here, right? So we've got to now let the lower time frame guide us. So just because it's taken it out, do we see any break of structure on the 15-minute after this got taken out? No. So going into Friday, what are we seeing? Sorry, I'm going to put that back again. I would also look on a daily time frame because we achieved this. I'll then look for what else is here. So here's some buy side liquidity here. Here's a daily order block that it may tap into. So I'll draw all these out and I'll see the reactions that are there. So going forward now on the 15-minute time frame, coming into this day. So when price is pushing bullish like this, I wouldn't want to fight it. I would wait to see those breaks in structure, but there hasn't really been anything. Even on the 5-minute, there was nothing here. Here was just a wick. So if you wanted to, if you see that this was just a sweep and it's coming down and it's still pushing so aggressively higher, you could look for entry after it wicks that out. Here we go. So broke structure, and then right here you have a small fair value gap. So that can be your entry, just from here to here. And then safe target can be here, or you can keep holding sorry, your position for the higher daily buy side liquidity. And yeah, that's pretty much it. So there's your buys for each day. You've got your higher time frame liquidity, structure, and whereabouts in the range it is, and then let the lower time frames guide you. That's all you have to do, and it's pretty simple. You just got to get familiar with it and backtest. Until next, guys, be good, and if you have any questions, please leave it in the comments and I'll do my best to answer them. Thanks.